Yeah. Now we were at machinery. It will come in the debit side. Everyone is clear about it, right? Why it should come in the debit side? Should I repeat?
Yes, got it.
Yeah, cool. Now let's come to the patents. Similar way, there is an adjustment for it. So we'll prepare the ledger. Instead of updating in the trading profit and loss account or balance sheet, we'll prepare a ledger for it. It will also come in the debit side. Yeah?
Yes.
Perfect. Debit balance comes in the debit side. Salaries account. There is an adjustment for it. So instead of putting it into the trading and profit, we'll create a ledger for it. Salaries account. Now tell me whether it should be a debit side or credit side. 18,000.
Debit.
Why is that?
Okay.
Now here is the logic. If you're finding it difficult, no. Simply look at whether it's in the debit side or credit side. It's in the debit side, right? So I had told if it is a debit balance, that means the to balance brought down will come in the debit side. If it is a credit balance, then by balance brought down will come in the credit side. Yeah?
Yeah, got it.
Okay. Now let's go to the insurance. Insurance also has an adjustment for it. So we'll prepare a ledger for it. 600 balance. Debit balance or credit balance? Debit side or credit side?
Debit. Debit.
Perfect. Here you can see 600 I have put. To balance brought down insurance account. Now let's very quickly go to the next one, drawings account. There is no adjustment for it. Now tell me, I had already told a lot of times, drawings, it's related to some other account, is opposite of some other account. Can somebody remember?
Capital. Contra
Perfect.
capital.
Perfect. Contra capital. We, instead of showing it as asset, we deduct it from the capital in the similar way that we did for sales and return inward. Can you guys remember that?
Yeah.
Yeah, perfect. Let me show that to you. Yes, this is the drawings account. Drawings account I put in the liability side and putting it a negative sign, meaning that I'll be deducting it from the capital. So let's go to the capital first. Capital, there is an adjustment for it. Can you guys see? Yeah, we'll create a ledger for it. Yeah.
Yeah.
Yeah. So here is a capital account and here is a balance. So the balance for it is 71,000. Should it be posted in the debit side or credit side of the ledger account?
Credit side.
Perfect. Perfect. Yeah. Credit side. Buy balance brought down. Yeah. 71,000. Now we are done with the capital. Last item, sundry debtors, sundry creditors. There is no adjustment for it. So if you remember, I had told, somebody actually asked me last time that why are both the names given together? So sometimes in the question they will be giving like this, and suppose sundry debtors and sundry creditors, they give a debit balance of this, and the credit side they give 10,000. That means sundry debtors is 14,500 and sundry creditors is 10,000. They have just give the information like that. They say sundry debtors and sundry creditors. Debit balance they give something and credit balance they give something else. That means debit balance is the sundry debtors and credit balance is the sundry creditors. However, in this question, credit balance is not given, meaning thereby sundry creditors is 0. Right?
Okay.
The whole thing is sundry debtors only. Is that clear?
Yes.
Yes.
Yeah. Now tell me, should it be, because there is no adjustment, so we'll be posting it in the trading and profit and loss account and balance sheet. Now tell me, is it an expense, income, asset or liability?
Expense.
Expense, sundry debtors. Think about it a little bit. If you remember, debtors are nothing but the people from whom we have to receive the money. People from whom we have to receive the money. Yeah.
Okay.
Yeah, but
So,
it's a debit balance, right? It's in posted in debit side.
I got it. Now tell me, is it a nominal account, is it a real account or personal account? Whenever there is a doubt, no, always come back to these rules. I'm already summarizing everything here. You can just quickly go through these. Nominal account,
It's a
real account or
personal
personal
account. Personal account.
Do you agree?
Yeah.
Perfect. Now, if it's a personal account, it should be asset or liability. It can never be income or expense, right? Now that we know this is a debit balance, very quickly we can say this is asset only. Yeah?
Yes. Yes.
Perfect. 14,500, I'll put it under the asset side. Yeah. Now 14,500. Here, we are done with the trial balance. We are absolutely done with the trial balance. Whatever we had to do, we are done. Now, so That means our step 2 is done. So step 2 is only for the trial balance. And I'm not referring to the adjustments here. Adjustments, I'm referring in the step 3. What it says is, post all the adjustment entries in the respective ledgers in working note. Post all the adjustment entries in the respective ledger in working note. I have already told you before. Now I'm also telling you. Adjustments are nothing but journal entries, which are not yet recorded in the books of the particular organization. So just think it of as a new transaction. You are just recording it. Instead of going to the journal, we are directly trying to post it in the ledger itself. We are directly trying to post it in the ledger itself. Now, let's very quickly go to the first one. It says write off machinery 10%, write off patents by 20%. Let's take these one by one. First of all, write off machinery by 10%. Somebody tell me the journal entry. If you remember, I'll just quickly give you a hint. Write off is nothing but depreciation.
Machinery account, depreciation account.
Now, which one is debited and which one is credited? The whole entry. I'm not now going to the steps.
Depreciation account will get debited and machinery account will get credited.
Does everyone agree to that entry?
Yes.
Any conflicting one? Yeah, okay. Now, depreciation account is getting debited and machinery account is getting credited. We have a machinery account here, right?
Yes.
Yeah. So, and a depreciation account will prepare because that account was not there, if you remember. Here it is a depreciation account. Now, tell me, in the depreciation account, will it be posted in the debit side or credit side?
Credit side.
Let me write down the entry so that it will be clear. Depreciation is getting debited to machinery. Yeah?
Yeah.
Now tell me, in the depreciation account, will it be posted in the debit side or credit side?
Credit side, then we'll write my machinery.
So the rule was, when determining which side a particular entry will be posted, we just look at the entry and see if that account is getting debited or credited. If it is getting debited, that means it will be posted in the debit side. If it is getting credited, then it will be posted in the credit side. Here in this entry, depreciation account is getting debited or credited?
Debited.
Yeah, should be posted in the debit side, right?
Yeah.
And the amount, to determine the amount, what we will do is, it says 10% of the machinery, right? We'll look at the value of the machinery. We have already put here, if you can see, 20,000, right? The balance, 10% of it comes to be 2,000 only, right?
Yes.
Yeah. So simple calculations, it will be very simple calculations should be there. Once you really understand what is happening, it will be very easy to calculate. Now that we have done it, let's go to the patent part. Sorry, no, other part, other account. It will also be posted in the machinery account, right? This one?
Yeah.
Yeah.
Which side it will be posted in?
Credit side.
Perfect. And the particulars will be?
By depreciation.
Perfect. And the amount will be?
2,000.
Perfect. Now see, I've already posted in the credit side. Now balancing we will do at the end of it. Balancing will do at the end of it after putting in all the adjustments. So we are basically done with this part. Now let's go to the patent part. The patent write-off is 20%. Now tell me the entry for it.
Depreciation debit to patent.
Perfect. It's just the name changes to, instead of machinery, it says patent, right? Now tell me, in the depreciation account, which side it will be posted in?
Debit side.
Perfect. The amount will determine the amount. Patent balance is 7,500 and it says 20%, which means it comes to 1,500, right?
Yes.
Yeah, simple calculation. So it will also be posted in the patent account, right? Which side will be posted in?
Credit side.
Perfect. Same amount, right? 1,500.
Yes.
Yeah. Now let's quickly go to this one we are done with. One adjustment we are done with. Let's go to the next one. Salaries for the month of March, unpaid 1,500. If you remember, I've actually analyzed this so many times that logic I'm repeating again so that you'll also remember, because this language is very new for you guys. Salaries for the month of March, unpaid 1,500, meaning that we got to know that salary outstanding is that 1,500. Salary, we are supposed to pay 1,500, but we have not paid it. Salary, we are supposed to pay 1,500, but we are not paid it. Now, tell me, what is the entry?
Salaries and salaries payable?
And which one is debit, which one is credited?
Salary payable debit to salary account.
You said salary payable account debit to salary account?
Yeah, but now I think that is
Okay,
wrong.
somebody else? Yeah, no problem, no problem. Whenever you're having doubt, go back to the same process what we had. No problem. Anyone else? No problem. We will go through. At least we are sure that two accounts those
Salary
are
got
involved in this.
debited.
One is
Salary
salary.
debited.
Let me just quickly remind you what are the steps.
Salary
Okay.
is the one will get debited and salary payable is credited.
Now, help me with determining what are the types of accounts. Salary is a what type of account?
Nominal.
Perfect. Nominal. And salary payable is? Salary payable, if you remember, it represents the people to whom we have to pay the salary. It represents the people to whom it's a, yes, perfect. Now, a nominal account, is it a expense or income?
Expense. Debit all expenses.
Perfect. Here only you got to know which one is debited and which one is credited, right? Guys?
Yes.
The moment you
Salary
get to know,
debit to
forget
salary
everything else.
payable.
So meaning thereby salary is getting debited and to salary payable, because you have to save a lot of time here. In the final accounts, it takes a lot of time, and to complete it, as many shortcuts that we can apply will apply. One debit you find, the other one will definitely a credit. So forget about everything else. So I just told you how to really determine very quickly, because whenever we'll be finding difficulty, we'll go back to the steps of journal entry. We'll see what are the accounts, what are the types of accounts, then we'll apply the golden rule. Now that we know salary account is getting debited and salary payable account is getting credited, so this entry will be posted in salary account. Which side?
Debit side.
Perfect. The amount will be?
To salary payable.
Sorry. Yeah, to salary payable. To salary payable, and the amount will be 1,500, right? 1,500, yes. And it will also be posted in salary payable account, right? Which was not there in our trial balance. So we'll be creating a new account for it. Yeah. It will be posted in the salary payable account in which side?
Credit side.
Credit side.
In the credit side. Now, in the credit
By
side,
salary.
by salary account, the amount will be exactly same, 1,500 only. Yeah. Now we are done with the next adjustments. Let's very quickly go to the unexpired insurance. I have discussed this many times. We have already determined what is the entry for it. Can you guys see this? This is the final entry, right?
Yes.
Yeah. Anyone wants me to repeat this concept?
No.
Okay. The entry is prepaid insurance account debit to insurance. Here in our example, it was 500. However, here it is 85 only. Yeah. One is prepaid insurance, one is insurance. Now, both of these accounts we did not have. So we'll create these accounts now. Insurance, sorry. Insurance was there, 600. Okay. Insurance was there. Now tell me, now the entry is prepaid insurance account debit to insurance account. This entry will be posted in the insurance account. Which side? Debit side or credit side? The entry is prepaid insurance debit to insurance.
Credit side.
Perfect. And the particulars will be?
By
Prepaid insurance, right?
By
Prepaid insurance. Yeah. And the amount is 85 only, right? Now we will also prepare a ledger called prepaid insurance, right?
Yes.
Now this entry will be posted in debit side or credit side of prepaid insurance?
Debit side.
Perfect. And the amount is 85 only. Yeah.
Yeah.
So I'll just recall what we are doing now. So we are just going through step by step. Step 1, we identified all the adjustments. Step 2, we went through all the accounts given in the trial balance. And if it has an adjustment, we updated the working note, the ledger account for it. If it does not have an adjustment, we updated to the trading and profit and loss account or balance sheet relevant place. We updated. Then we are now at posting all the adjustment entries. For each adjustment entry, we are determining what is the journal entry, and we are posting that journal entry to ledgers which are there in the working note. Now we are done with the unexpired insurance. Let's go to the make provision for doubtful debts of 5%. Make provision for doubtful debts of 5%. Now we are making a provision. If you remember, the entry was bad debt account debit to provision for doubtful debts account. So the entry was bad debt account debit to provision. The reason was bad debt is an expense that is happening. Provision for doubtful debts is nothing but representing the people, representing the debtors only. We are giving a specific name to it because here this transaction is separate. Here we are assuming that 5% of our debtors will go bad. Do you remember that concept? We have discussed this so many times.
Yes.
Yeah. So the entry is bad debt account debit to provision account. Now that we got to know bad debt account debit to provision account, it will go to the bad debt account, right? So bad debt account, yeah, here it is. Now bad debt account was not there in trial balance. So there is no opening balance for it. That's why. And we are creating a new account for it. Now that we know the entry is bad debt account debit to provision account, this entry will be posted in which side of bad debt account?
Debit.
Perfect. The particulars will be to provision for bad debt account. The amount will be determined as 14,500. 14,500 is nothing but sundry debtors into 5%. Do you remember that? The percentage that we determine, that is of debtors only. Whatever debtor we have, percentage of that we determine that this much is a provision for bad debt. Yeah. Clear?
Yeah.
Yes.
Yeah.
Yes.
Okay. Now this is nothing but if you guys can see, I've already put in the formula 14,500 into 5%, which comes to 725. Now the other aspect of it is provision for bad debt. Provision for bad debt. I'll create a new account for it because there is no account in the trial balance. Provision for bad debt, will it be posted in the credit side or debit side?
Credit.
Perfect. Now the particulars will be to bad debt account. Yeah. The amount will be exactly same, 725. Everybody clear? Any doubts until now?
No.
I'm going in a slightly pace way because we have already discussed this transaction so many times. And let's very quickly go to the provide interest on capital account. Provide interest on capital account. If you remember, I am again telling that we are providing interest, means that we have not paid it. We're just acknowledging that we will pay interest on capital of 5,000 rupees. Now, interest on capital, from the language of it, we can say that something we are paying to the owner, isn't it?
Yes.
So
Yes.
whatever capital he has invested, we are paying him interest, basically. So tell me, what is the entry in it? Entry for it. Can somebody guess? We have not discussed this transaction before, but if somebody can catch on. What are the two aspects in it?
Interest account.
Interest account, perfect. Other aspect?
Interest payable.
Interest payable, yes.
Payable
Interest
is the one
payable-
that we have to pay, right? Or-
Interest payable normally represents the person to whom we have to pay, right? So
Okay,
who is
okay.
that person here? Who is that
The
person here?
owners.
Owner.
Owner only, right? So instead of saying interest payable, can I say owner?
Yeah.
So owner is a better
Because
term
we
over
don't-
here.
Sorry?
Owner is a better term than interest payable over
No,
here.
there is another better term. Even another better term.
Drawings
for owner.
account.
No. Capital account.
Right.
Drawings is also representing owner only, but that is specific for when the owner is drawing money, not when we are paying him. Owner is drawing his money from the organization. However, this is the capital will more it will add value to the capital, right? Because
Okay,
when we
yeah,
have to pay
This
something to the
affects
owner.
the capital account also, right?
Yes.
Okay.
This affects capital account only, and the other aspect is capital account only. And instead of saying interest, can I say interest on capital, so that it will be segregated from all the other interest if we have in the organization, just to give it a specific name. Both are similar only. Interest or
Will it
interest
be-
on capital is similar.
Ledger
Sorry?
Then. Will it be posted in a different ledger then?
Yes. Interest on capital is a separate account. Yes.
Okay.
Yeah. Now that we have determined that, let's go on to what type of account these are. Interest on capital is a
Nominal.
perfect nominal account. Capital is a
Real.
Personal account.
personal account, right? It is representing the owner, right?
Yes.
Now, interest on capital here is expense or income?
Expense.
Perfect. It should be debited, right?
Yeah.
Now that you have got to know one is debit, definitely capital will be credited, right?
Yes.
Yes.
Now let's end the discussion and let's do that. Interest on capital account debit to capital account. Now that we have determined this, interest on capital account we did not have. We will create a new one. Capital account we had. Okay, interest on capital. Let me bring in that first. Okay, interest on capital will it be posted on the debit side or credit side?
Debit side.
Debit side, perfect. And the particular should be to capital, right?
Right.
Yeah.
Amount is
Sorry,
nothing but-
Dheeraj, what was that thing? What was that account, the ledger? What was the statement? Could you just go on
Statement
top and just show
was-
me that? It's
Provide interest on capital of 5,000 rupees.
no, in this you just showed right now the capital is personal account, and that one is debit the receiver, credit the giver, right?
Yeah.
So capital is receiving in this one.
No. Again, I'll repeat. I said in the beginning itself, provide interest means.
Oh,
we
it's
have
not paid yet. Okay, my bad.
Yeah. No problem. So it is getting in the interest on capital account will be posted in the debit side. Now, other account is capital account, right? Will it be posted in the debit side or credit side of this entry for this entry? The entry I'll show you again. Interest on capital to
Credit
capital
side.
account. Credit side, yeah.
Credit.
The particulars will be by.
Interest on capital.
Perfect. Amount is nothing
But
but 5,000 only.
interest on capital, I mean, prepaid interest is also similar to interest payable, right? Why are we not clubbing it to another
No.
account? Like
Prepaid interest, did we have that? Prepaid insurance we had, interest we did not have here in this question. We don't have it.
okay,
I
and
think
we can
prepaid insurance we
rename-
had. Sorry?
Yeah. Can we rename it into interest payable, or we should only go with interest on capital?
Or always go for interest on capital. So see, whatever is related to owner, no, it has its own relevance. Whatever related to the owner, because owner is a very important person for the organization. Whatever related to the owner, that has its own relevance, which is exactly why precedence is given to whatever very remotely even linked to the owner, that is given very precedence over everything else. So this
Okay,
is kind
so
of standard that is
specify-
maintained. Yeah.
Okay.
Yeah, which is exactly why it has its own identity. We call it in a very technical term is materiality. A particular account, when it is material enough, gets its own identity. It is given a separate disclosure separately. It is maintained, and everything is done with it separately instead of clubbing it with other general kind of transactions. So it has its own materiality. Okay, anyways, we can just forget about that. You can just by heart it that whenever the interest on capital is there, you will create a new account for it.
Okay.
Now let's quickly move to commission due for the work done but not received. The meaning of it is nothing but we have to receive some commission. We have provided some service. We have to receive some commission, but we have not received yet. Now, we have actually discussed this twice now, today itself. Now tell me what is the entry for it.
Commission account, debit to commission receivable account, credit.
Commission you debited and commission receivable you credited. Okay. Anybody else? Tell me, commission account is a nominal account, real account, or personal account?
Nominal.
Nominal. Is it an income or expense here?
It's an income.
Yeah.
Income.
It's
Do you
an
agree?
income.
Should it be debited or credited?
Income should be credited. Nominal account.
So the entry that you told, we just have to flip it, right? So commission receivable account debit to commission account. Yeah. Is that clear? Yeah.
Yes.
No problem. Whenever you're having doubt, just go back to the same concept that we have in the journal entry. You will get the answer. Very simple. Now, the entry that now that we know commission receivable account debit to commission account, now let's create the ledger for it. One is commission account and one is commission receivable account. So the commission account will be posted on the debit side or credit side. The entry is commission receivable account debit to commission.
Which ledger are we saying for commission receivable?
Commission account. Yes. Commission account only. In the credit side, right?
Yeah.
Yeah. By commission receivable, which amount is nothing but 5,000 only. 5,000 was given in the question itself. In the commission receivable account, where it will be posted, debit side or credit side?
Debit side.
Perfect. Let me open that. Let me do that. So it is coming as 5,000 only. Now, once we are done with that, let's go to the next adjustments. Only two only left. Next one is wages include a sum of 2,000 spent on the erection of a cycle stand for employees. I've already repeated so many times. I want somebody to tell me what is the entry.
Cycle stand account
Debit to
debit and wages account credit.
perfect, perfect. Cycle stand debit. Anybody any doubt? I'll share this document with all of you. But however, just keep in mind, I'm not maintaining it in an organized manner, but I'm just like a rough work I'm doing at the time of discussing with you guys. But you can refer back to these concepts wherever mentioned and note these down if you have not noted during our discussions. Now, cycle stand debit to wages account. The sole reason is earlier wages was debited. Now we are crediting it to cancel it off. Now, cycle stand should have been debited, so we are debiting it now. Now that we know that, let's create a cycle stand account. Again, I'm repeating, you can club it to the machinery account as well. You can give it a separate name. It's up to you, no problem. Cycle stand is here. Now, will it be posted on the debit side or credit side?
Debit side.
Perfect. Amount is 2,000 and the particulars will be 2 wages, right? Other aspect?
Yeah.
Perfect. 2,000. Now, the other account is wages account. Wages account we had in between. So where did it go? Yeah, here it is. Wages account. Now, will it be posted on the debit side or credit side?
Credit.
Credit side, perfect. And the particulars will be by cycle stand, right? The amount will be 2,000 only. Now that we have done it, let's go to the last one. It says value of closing stock. Value of stock at 31st December 2005, meaning that by closing stock only. If you remember, the opening stock was given as 1/1/2005 and the closing stock is given as 31/12/2005. You can always get to know from that. If the stock is given for 31st December of a particular year, that is a closing stock. If it is given for 1st January of a particular year, that is opening stock. Yeah, that is the whole meaning of opening and closing, isn't it? Now tell me, what was the logic in closing stock? I'll just highlight, I'll give you a major hint. I've already given you the answer. What is it? The closing stock? Is it income, expense?
Income.
Income only, yes. Now, if it is income, it will be posted in the credit side of the trading and profit and loss account, right?
Yeah.
Yeah. One thing you guys have to remember here, when I told, in the trial balance, for everything journal entry ledger have already been done. However, for everything that is there in the adjustments, nothing has been done. So for everything we are making an entry. We are making an entry and we're seeing what is the dual effect, what accounts is it affecting. Every transaction affected 2 accounts. Here, closing stock affected the profit, one part. Can somebody tell me what other thing that the closing stock will affect?
Cash.
No. Will you receive cash because you have a closing stock? Or will you pay cash? Cash is not getting affected.
No.
It's just that you realize today that you have closing stock, isn't it? That's what is happening here. You realize that you have closing stock. Cash is not getting affected. Can somebody tell me what is the other thing, leg of this particular transaction?
What is the first aspect that you got affected?
So the first aspect was when we determined when there is a closing stock, in a nutshell, if I tell you when there is a closing stock, we will have to decrease the cost. Why do we have to decrease the cost? Because if we have sold only 80 units out of 100 units, then we will have to compare the 80 units cost only to the sell value. In order to do that, we decrease the cost. And in the process of decreasing the cost, we are recognizing it as an income. Yeah, that is one of the aspects. So that is the income, that is behaving as an income. Yeah. Okay. Now, other aspect is what? Now, I'll ask you the question. Again, I received the 10-minute pop-up right now. Yeah. So again, the same thing will repeat. If it forcefully we log out, then we'll come back in the same link. Now, the other aspect, let me ask you a question. Do you think the closing stock that you have with you as of today is an asset for you?
Yeah, that's true.
Others,
Yeah,
please.
yeah, Dheeraj, it's an asset.
Yeah.
Because
So
you gave an example with, for example, if we have like five soaps, right? So out of five
yeah.
soaps, you have sold four. One is pending,
Yes.
so that four has
Yes.
been sold for 150,
Yeah.
which costs for 100 rupees. But the thing
Yeah.
is, we are in benefit of $70, right?
Yeah.
70
Yeah.
rupees,
Yeah.
yeah. Right.
Yeah. Absolutely. So one soap is left out with us still, right? After the sell. At the end of the year, we are still left with
Right.
one soap. So that
Right.
is asset for us. That is because
Right.
that is something material that has a value to it. What is asset? Whatever has a value to it is asset for us. And here, now that we have realized the closing stock has a value of 6,800, that means in our store, when we'll go to the factory, we will have some goods worth 6,800, isn't it? Others? Anyone?
Yes.
Yes,
Any
yes.
doubts in this? So it should be
Mm.
asset for us. So it is also posted in the asset side.
So it has double entry in the trading and profit and loss as well as in balance sheet.
Yes. Now let me take your sentence and let me ask you, do you think every transaction that we went through has a double effect? Let's take for an example, okay? Write off machinery, it affected depreciation account and also machinery account, isn't it?
Yes.
Patents, it affected depreciation account and also patent account, right?
Mm-hmm.
Every transaction has a double effect.
Only
Here,
adjustments, right? Only
This was the
only
adjustments
only
is
one
adjustments.
having.
that didn't have. So we made it have a double
Yes,
effect.
yes. So closing stock actually we can go through journal entry, but I did not want to go through the journal entry because that becomes a little critical, and so I wanted to go in a slightly different path so that also you will remember, because again this is one of the aspects in which students tend to make a mistake. They'll post it in the trading and profit and loss account, but they'll forget to post it in the asset side.
But if we do like that, if we post it in the credit side of trading and profit and loss, there should be a
Yeah.
corresponding entry in the debit side to cancel it off, right? In the trading.
Yes. Now that you have brought that up, let me say. So we have posted it in the credit side, right?
Hmm.
Meaning thereby, what we have done is we have credited trading and profit and loss account. Can I say that?
Yes.
I mean, if you guys can look at the entry that is happening here, trading account is getting debited to opening stock. Trading account is debited to purchase account. Similarly, I can say sales account is debited to trading and profit and loss account. Can you guys relate to the concept of ledger?
Yeah.
Anyone? If you remember in the debit in the ledger, whenever we are posting entry, no, I had told it is similar to journal entry. You just have to read it in a certain way. So whatever is debit in the posted in the debit side, we can read it as trading and profit and loss account debited to opening stock. Then we can say trading and profit and loss account credited by sales account, which is nothing but sales account is debited to trading and profit and loss account. I'll show that here. Here, if you guys can see, when depreciation account was there, machinery account is credited by depreciation, which is nothing but depreciation account is debited by 2002 machinery account. Can you guys relate to that?
Yes.
So here, what I'm trying to say is, when we have already posted the entry, what is the entry that is exactly happening here is closing stock account is getting debited to trading and profit loss account. Can I say that? For 6,800. Anyone has
Yes.
any doubt in this? This is the entry that we posted just right now.
Okay.
I did not want to go there, but just because you pointed out, let me just very quickly give you a very vague thing. You can just forget it right away. You can remember that closing stock whenever is there, you just have to post it in the trading account in the income side and our asset side and asset side of the balance sheet. However, just to give you a very quick concept, this is the entry that is happening. If you guys can see, closing stock is getting debited. Closing stock, is it expense, income, asset, or liability? It is a stock, right? It is a stock. Forget about this analysis. Let's think it from a general perspective. Is it a nominal account, real account, or personal account? Closing stock are nothing but the goods. Those are left out in your factory. Having that
Real.
said, is it a nominal account? Real account, right? So it will be an asset or liability, right?
Yeah.
So is it a asset? Is it a liability? Is it getting debited
Asset.
or is it getting credited? Asset, right?
Yeah.
Yeah, you can also link from that perspective. Same thing is happening. We are posting in the profit and loss account here, and we are taking this debit to the asset side. Other than that, you guys can simply remember like this. Whenever you have closing stock, put it in the credit side of the profit and loss account because it is increasing profit, it is an income, and also put it in the asset side because we have the asset with us. Yeah.
So the opposite thing also should happen, right? We have posted opening stock, so it should also come in balance sheet.
No. The difference is opening stock was given. That is a very good question. Very good question you asked. Actually, that is one of the tricky parts where the teachers play a very good trick with the students. Here, the stock is given in where? In the trial balance, right? That means entry for that is already done, isn't it?
Yeah.
Can I say that? Entry for it is already done. So the second effect of it is already there somewhere in these accounts. Can I say that?
Yeah.
Didn't get you. Did it?
So what I'm saying is, if the entry for the opening stock is already done, then effect for it, the other effect for it is already done somewhere in these accounts, isn't it?
Yes. Yes.
So we don't have to worry about the other effect because it is
Okay.
already there. Because the journal entry is
Okay.
already done and ledger is already done.
Okay. So because
However,
closing stock was given in
yes.
adjustment, we are.
Now you ask me, what if the opening stock is given in the adjustment? Then it will have a second effect. That is the trick that a lot of teachers play. When the opening stock will be given in the adjustment, that will have a two effects. How it will happen, we'll discuss it when the question will come. Because I don't think that critical question sir will give, so I'm not bringing that concept now. Let's forget that. Let's remember only closing stock whenever it's there. Post it in the income side in the profit and loss account and the asset side of balance sheet. Yeah.
Yeah.
Now, good news, we are done with the adjustments. We're done with the trial balance. Now we are only left with one thing. Let's go to the next step. Balance all the ledgers, put the revised balances in the trading and profit and loss account and balance sheet. Simple process, isn't it? Balance all the ledgers, put the revised balance in trading and profit and loss account and balance sheet. Now, let me very quickly ask you guys, while I'm balancing everything, what are the steps in balancing? Can somebody repeat?
We find out the maximum
sides.
total and put that total on both sides, and then buy, brought down, and carry it down.
Perfect. Now, I'm not repeating that process because we have done it so many times by now. Yeah, I have already done it. So I'm just showing you guys how I have done it. Can you guys see? So I'm balancing in the similar way that C just said. We are finding the total, the highest total. So we are putting the highest total in both the sides. Now in the lower side, we are finding the balancing figure to match that side. Yeah. Everybody is clear?
Yes.
Yeah.
Awesome. Now, I've already done it. I've already found all the balances for all the entries. The similar way I just did for all the accounts. Okay. Now that we have done it, let's go account by account and post them. Account by account and post them in where? Profit and loss account and balance sheet. Let's go to the depreciation account first. Depreciation account will go where? Somebody? Trading account, profit and loss account, balance sheet.